right, here's the Fed balance sheet update, which just came in Thursday after trading. So yeah, this is back to 2004. This is where it shot up in 2008. Here's where it shot up in our crash this year. I'm going to zoom in, and you can see that it's been flat for about the last month. But this past week, it just started ticking up a little bit again. It's still under 7 trillion, so tiny. It's tiny right now, but it has ticked up now. It's not going down. It's basically kind of staying flat here for a while, but so we'll have to see if it accelerates up or if it just kind of stays flat after this. But yeah, this is a change in direction here on the Fed balance sheet. And then here's the Treasury General account. So this is Congress's checking account at the Fed. I call this the helicopter general account. And you can see that it was going up for several weeks in a row. And so when this is going up, they're taking liquidity out of the economy. Tax money goes in here, or when the Fed is buying bonds, that money goes into this account. And you can see the Fed has kind of stopped buying the treasuries to some extent, and the treasury account's just kind of flat now. So if this I mean 1.6 trillion, more than 1.6 trillion, that's a lot. That's the most that's ever been in this account by a long shot. And if this starts coming down, that's a ton of inflationary kind of helicopter money that could come into the economy in a hurry. Could be like an infrastructure spending bill or more stimulus, kind of stuff like that. But for now, it's just flat. So there's no liquidity coming from the Treasury right now. And the Fed balance sheet has ticked up a little bit, still below 7 trillion. I mean, they're doing a little bit of treasury buying and bond, like corporate bond buying, and it looks like the repo and the swap lines, they've taken some liquidity out of there, and that's all we're seeing on the Fed balance sheet right now. So still pretty minimal liquidity. And then here's the Fed funds rate. So the interest rates are the same; they haven't moved. It's just 0.08, really close to zero on the Fed funds interest rate. And here I'm on the S&P, just kind of checking out the close and the aftermarket. So not super interesting today. Opened a tiny bit down and did some pretty intense sideways action here, but it doesn't look like a whole lot's going on. And this isn't really signaling anything specific in either direction. We're between a couple of immediate support and resistance areas here relative to the previous peak. So as far as a double top is concerned, this is just kind of in between. And this whole area where it is now is an area to watch. And then if it gets a bullish move out of here, then up here to this 2-year trend line, that this goes to the bottom of the 2018 crash. And so we've already gotten several rejections off of this line this year. And you can see back here where we broke and tested this thing earlier and then came back and rejected off of it again. And so, yeah, there's two bearish things to watch out for before the market actually gets bullish. We have this double top area here where you could get a bearish move and then a rejection off of this trend line again. So that's kind of the thing to watch out for on the S&P. On the Qs, yeah, I mean, it doesn't look strong, but it hasn't quite broken down yet. And we'll see what we get tomorrow. That trend line's a little too tight. Down, maybe down here. That's probably a good spot for it. Or even maybe in here somewhere. But that kind of area in general, kind of breaking down to the 250 area, is going to start looking bearish on the Qs. And just for the infotech sector, the Nasdaq, the Qs, if they do break down here below 250, then this could be a little bit scary for the market, but it's more likely to get support off of this line. So that's the kind of thing to look out for tomorrow. If we get down here, do we get support above 250? And let's check out the other sectors. Yeah, so just kind of wobbling. Yeah, not much going on. Oh, has gold broken out? Oh yeah, gold's just kind of sitting up where it moved up to. Yeah, so gold got a pretty good breakout here. And so we're not really getting the breakdown on the dollar yet. The dollar's still holding at this bottom resistance area. This is a long-term resistance area. So I think if this breaks down, it should be good for gold or silver. If it holds on, gold should be okay. Silver probably not as much. Let's check out silver. So yeah, silver had a similar breakout that chased gold, which is interesting because those don't necessarily. I mean, these charts are really similar, the gold and the silver chart, and those are not generally that similar of assets. Like gold can do really well when commodities are not doing well, but I guess we're getting a market that's okay for commodities, so silver can look a little bit more similar to the gold chart for right now. And then what are the crazy hypey stocks? Yeah, so Tesla got a reversal, and this is a pretty intense thing here. So I mean, Tesla's on multiple trend lines, like it's bubble on top of bubble on top of bubble on top of, I don't even know. We don't even really have a higher trend line yet. So after this thing looks like it's gonna consolidate pretty soon here. We're getting a consolidation triangle, and this thing should pop. Maybe not tomorrow. Yeah, either Friday or Monday. This thing should pop one way or the other. And this shape is symmetrical. It doesn't really indicate anything. But when you get this symmetrical triangle like this, especially we've reversed into it, this is not a bullish triangle. This is just completely arbitrary for the direction. And it could pop either direction. So if it moves up, that should set up a really high angled bubble line, which could be pretty crazy. If it gets even further kind of hyperbolic movement on Tesla, that would be pretty wild. And then if it breaks down, we have a couple support areas down here. But I mean, they're down, around wherever this is in the 11s, or all the way down to like 800 or something, all the way down to this one. So Tesla could get, well, not that it hasn't been, it's already crazy, but it could do some more crazy stuff soon in the next couple of trading days. And so that's another stock that's pretty similar to the Qs, to see if, the infotech and Tesla will keep bubbling up and keep separating from the market, or if they come down, and then probably the whole market would come down if they're coming down. And so those are important to watch. But that's kind of it. Not a ton of liquidity from the Fed for the fourth or fifth week in a row here, and nothing coming from the Treasury yet. So it should just be kind of a stagflation environment, which has been just roughly chopping sideways for quite a while. There's definitely some risk that it could break down, and there's a bit of resistance overhead. So um, yeah, it's pretty tough shorting this thing here. I mean, but going long, there's resistance right here and right here. So I don't know. Like shorting it could make a big move, but the odds that it breaks down right now, I don't know how big they are. It doesn't look like we're getting a ton of breakdown signals, but I think, well, I took a look at the VIX before. Yeah, the VIX is just kind of meh. So the VIX is still trending up overall. So this is probably the one thing I think that's signaling that it might want to move down, but it doesn't have to do it yet. I mean, it could keep kind of wobbling for a week or 2 weeks or something, and it can wobble. It can wobble like this with the market going up a little bit or sideways. So there's nothing urgent about this kind of VIX behavior. And yeah, I don't know. I guess yeah, it could break down tomorrow. It doesn't look that crazy. It's just kind of in a tight zone. But I guess just to kind of look at the areas if it does start moving around a lot, where there are better trading setups. Like I think this is the last area to get a short end for the bears. I think before it gets out into bull territory, and then for an up move, and then if it starts breaking down, once it gets below this area, this is short area here where there's very little resistance. So as soon as you get into here around, and this is not investment advice, like 31.25, somewhere in here, this is short area all the way down here to our long-term trend lines and our moving average kind of support area. So that's where it is, and it's probably just going to keep chopping around for a little while. But that's, if it breaks up a little bit, there's one more bear target here. And if it breaks down, it's not bearish until it gets through here for like a down, for like a technical. So that, yeah, this is like a technical kind of spot to short once it breaks down here. But this is a spot to short that's not a technical short. This is a potential peak that is from the bubble model and the long-term trend lines. And so this is like a hypothetical kind of shorting area up here that could be a peak. And actually where we are right now is also kind of a peak area at, because this is a double top. So there's a potential reversal point here and a potential reversal point here. And those are not technical short areas. It's not really a good spot to do like a technical short trade until it breaks down below here. But those are the areas, like 1, 2, 3. There's 3 areas to look at for kind of reversal points. And then if the market can get up here and find support, this is bullish, super bull territory. Yeah, and so that's the outlook right now. It still just looks kind of stagflation, not much liquidity, and it could just do some more sideways stuff. So kind of boring, and I guess that's all right. Like if the balance sheets start moving around crazy again, I don't know. I have to like think about it. But for now, not much has changed. So that's all for now, and happy trading.